All right, guys. So I'm still talking about breaker blocks. Okay, so after the thread I dropped on my Twitter, okay, um, some of my followers requested that I should make a video explaining breaker blocks. So Tana, here you go. Now I want to explain and I'll also be showing you guys some examples on breaker blocks. All right. Now I already highlighted some breaker block entries. Okay, I highlighted a few of them. Okay. Now, first of all, what is a breaker block? All right. Let me just give you a quick illustration of a breaker block. All right. Now, let's say for example, for instance, we have price do something like this. Okay. Let's say we have price. Let's say we have price do something like that, or we also have something of this nature. All right. Now, in most cases, okay, you get to discover that there is always a reaction around this region. All right. Now, usually, if you're trading structure, I understand that, okay, maybe you must have learned that you have this high, okay, then you have this low. Then once you have a break of structure up here, you wait for price to come back to the other block, and then you buy from the other block. Okay. I understand if you have this theory, and it does not mean that this theory is wrong, all right? But then if you observe closely, you notice that while you have your long position here, okay, while you're waiting for price to come and activate your buy limit, you end up seeing that price will ignore your buy limit and instead buy from somewhere here. Okay, now why is this, or why does price have to behave this way sometimes? Okay, now the reason is because there's something we call PD arrays, all right? We call them premium to discount array, all right? Now, that is like a whole different topic, but then I'm just going to be teaching you guys recap blocks today. Now, in most cases, whenever you see price move with a very huge momentum, okay? I talked about displacement last on my Twitter. Now, if you get to see price move with displacement, all right? Now, what I mean by displacement, I mean you get to see price move with very high volatility. Now, you will rarely, okay, you will rarely or you will not even see price retrace back to the other block in most cases. This is because the inefficiency that price has created is too much. Okay, the whole massive move here, it will take a lot. Okay, it will take a lot for price to 100% correct and then gain buy pressure from your other block. But instead, you will just see that price will just, correct possibly to this previous high over here, and then you get to see that what price has gone bullish from there. Now, whenever you see a massive displacement on this move, okay, on this side, if you have a very good or volatile move, all right, in most cases, price will instead buy from your other block. That is when you have to, okay, anticipate that price will respect your other block instead of your breaker block, I mean, instead of this other block over here, right? So we also have a similar example right here, okay? Now, maybe you must have heard that, okay, we have what? Let me see, maybe buy side liquidity taken over here. Then we have what? Sell side liquidity taken over here. Then you maybe you're waiting for price to come back to maybe your fair value gap or your inducement, whatever, all right? And then you want price to come back up. See, whenever you have, if at all you have a very huge displacement on here, okay, price will most likely not even have the opportunity of coming back up, okay, retracing almost 100% to fill in your fair value gap. In most cases, price will instead sell from a breaker block at this point. That is if we get to see displacement. Now, if I don't get to see displacement, I wouldn't want to trade breaker blocks, all right? So one major thing you should look out for before trading breaker block is make sure you have a very good displacement, all right? So now, without no further explanation or without no further illustrations, let us go over to live chat, all right? Let's go and look at breaker blocks on the live chat. Now, I highlighted some examples like I said earlier, okay? Now, for instance, okay, take a look at this, all right? Take a look at this. Now, you have what? Buy side. What's it called? You have what? A break of structure over here. Let's view this from the 4-hour time frame, okay? You have a break of structure. Where's that? Okay, sweet. Now, you have a break of structure right here, okay? You have a break of structure right here. Now, one thing I always tell my students when I'm teaching them is that make sure, okay, whenever you're trading is all about having good confluences. Now, what is confluence? Confluence is basically when you have a lot of things telling you the same thing. Okay. Now, we have what a break of structure over here. All right. Now, first confluence is that okay, we are on what an uptrend, so we are looking for buys. Okay, now that is the first confluence. The trend is in our favor. Then the second confluence, maybe you use the Fibonacci retracement tool, all right, or your premium to discount. Now, right here, you can see that, okay, all right, let me just use the replay tool so we understand. All right. Now, let's say you get to see price do some things like this, all right? Now, you notice that retracement is starting. Sweet, okay? So now you get to apply your premium to discount, all right? Now, you automatically know that you only want to buy from below the 0.5 level, okay? Now, that is what? Second confluence. Now, if you look closely, okay? If you look closely, we can see what? We can see an internal low. And what rests below this low, of course, liquidity. My students will know that one already, okay? Liquidity is resting below this low. So for price to come down, okay, once price takes out this liquidity, okay, we have a very high possibility of what? Price going bullish. Okay, now do not forget, I told you guys that when we want to use breakout blocks is when we have what? Massive price displacement. Now look at this. Now this buy move here is huge displacement. Now some traders, okay, who do not understand breakout blocks will be waiting for price to come to maybe this other block here. Or some might even be waiting for price to come down here, all right? Now, but then there is a breakout block and you can see this huge displacement. So instead, okay, instead of having what? Your buy limit here, okay? Instead of having your buy limit here, you will want to use the breakout block instead, okay? So instead of having your buy limit here, you instead will have, you'll be trading the breakout block over here with your entry here. Now, just in case maybe you are not able to fully identify it, that's why you have to be smart, okay? Price is dynamic, price is flexible. Then you have to go down to the 1 hour time frame. Now, on the 1 hour time frame, you clearly see the breakout block. Now, the breakout block here is what? Is this candlestick here. You can see. So you get to highlight it, all right? You get to highlight it. You get to pull your entry, your stop loss, and your take profit, everything, okay? Then you watch how price will expect. Now, don't forget, this is what? An internal low, and we have liquidity line below the low. So it's a very good thing if price gets to, take out sales and liquidity and then buys from there, all right? So it's that simple, okay? Now, if you get to, just watch price. Just look at how price, okay, snipes your breakout block. Now, while other traders are waiting for price to get to their other block, you've caught this trade, okay, using breakout block entries, all right? Because price will most likely not even retrace back to the other block. I told you why. Huge displacement, and price will most likely not be able to retrace 100% to your other block here and then buy. So instead, you're going to be using the breakout block, all right? Then you can see how this is going. Okay, so you see price has taken that what? Buy side already. All right. So you can also decide to take profit here. All right. But then you can see take profit smashed. All right. So I'm going to be showing you also what's it called? I'm going to be showing you another example. Okay. Now this is another example here, guys. This is another example. If you look closely, you can see this huge displacement over here. You can see these huge candlesticks. Now, this is a very huge displacement, all right? Now, while some traders, okay, are waiting for price to retrace down to their other block, maybe somewhere around here, all right? Instead, price will do what? We'll use a breakout block entry. Because this displacement is massive and price will most likely not be able to retrace 100% to this other block here. So instead, okay, use your premium to discount. Of course, you are buying from discount, okay? So you're good to go using breakout blocks, all right? Using breakout blocks, okay? Now your entry is going to be what? On the breakout block, just the opening, all right? Stop loss, few pips below the breakout block, all right? Then take profits, external range liquidity, of course. and then you get to see how price, respects your analysis. So now, while other traders are waiting for price to reach their order block here, you cut the trade while their own entry was ignored. Now, not that price cannot, okay? Now, this does not mean that price cannot or price will never respect other blocks. No, this is simply because this displacement here is massive. And I'll only advise you trade breaker block when you have good displacement, all right? If you get to see price sluggishly moving, then trading breaker blocks will not be a good idea. Okay, I really advise you trade breaker blocks only when you see huge price displacement. All right, so I'm going to show you a few more examples and then we'll call it a day. All right, this is one I also highlighted here again. Okay, you can see the huge displacement we had here. Huge displacement over here. Huge buy candlesticks. Momentum. So while other traders are waiting for price to do what? To maybe come to their order block here. Price ends up what? Respecting the breaker block and then going bullish from the breaker block. You can see. So while other traders are looking to go long from here, okay, waiting for price to respect their buy limits, instead you've gotten what? An entry. Instead, you've gotten an entry from what? The breaker block. You get. So that is how simple it is actually. You just need to understand what the concept. When you have huge displacement, then price will most likely not retrace 100%. Price will end up what? Using a breaker block. Just like in this case again. So I believe that I've made a point here, and I believe that you've also learned. All right. So we actually will call it a day here. So happy learning, happy trading. Is King Wesley, and I'm signing out.